but we've had things grinding higher, and we haven't broken down any major way to change anything right now. We talked about some of the levels that would have to get violated for that red light to drop on stocks, or the green light rather, to drop on stocks. It was the red light yesterday I put on bonds, and the fact that bonds sold through the stock selling today gives us more evidence that treasuries are in some pretty conviction bearish mode right now. Dollar is probably going to have to go green soon, but I'll keep watching that carefully. Crypto might have to go yellow if it slips back into that long-term downtrend. But for now, we'll keep everything the same. What I'm interested in here is exploring a quick logic and kind of a math situation behind prediction markets. I'm going to look at a tweet that I wrote earlier to make sure I get the logic right. But as I wrote this morning, if you look at the bond market, you can explain it all basically through the economics. Folks are trying to explain it through some of the election odds, but you could basically just align the economic surprise rate, and that gives you a chart that looks a lot like the Treasury yield moving higher. The fact that we flipped from bull steepening going into the Fed cut to on a dime bear steepening coming out of the Fed cut, and that was the bottom on September 18th for the yield pretty much tells you the full story. However, I do have a quick thought, which is a fun sort of experiment on considering which is more correct. The polling data, which on average is basically like 50-50 Trump versus Harris, versus the prediction or the betting markets, which have been skewing hard towards President Trump. The argument basically is that when you put money on the line, you're incentivized to be more correct. And I think even though there's some argument that perhaps a different sample set of people who want to bet in prediction markets might skew them in favor of their candidates, ultimately, if you're a trader or you're a gambler or a bettor, a speculator trying to make money, right now, if those betting markets are wrong, the value proposition of betting against them is too high. Here's what I mean. Kalshi has Trump at 60%. The polls have him basically at 50%. If we just assume these two data sets are equal in value, then if we combine the equal weighted average between the two, that gets you more to a 55% Trump, 45% Harris, which on the Kalshi marketplace right now would mean that you would buy Harris at 40, and then when it normalizes to the expected value of 45, you take that $5 off of 40 and make a 12.5% gain. And with the election 2 weeks away, how often in stocks can you get a 12.5% gain in 2 weeks? You really don't. The only time that happens is in very rare events like VIX 60 to get a 2-week gain of 12.5%. Annualize that, and that's insane. So anybody who's actually interested in making money, if they thought the betting markets were wrong, or even if they don't, even if you just assume to normalize and equal weight them with the polls, you'd get 12.5% in 2 weeks. The fact that that gap is not closing suggests the betting markets are probably more correct.